What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, but nonetheless to go ahead and get it started, a little different from how I usually do my videos, typically go from lower time frames, higher time frames, but because of what I saw here on the 6-month chart here presented currently, I'm going to start off with the higher time frames, then I'll move into the lower time frames, but the main topic of this video here is the 6-month chart. Demonstrated currently is the traditional candlesticks. And what I noticed in this chart was, if we look here all the way at the inception of Bitcoin, back in 2009, here from inception up to the $30 in, again, the same, or not same, but 2 years later in 2011, this would be here at cycle 1, a whopping 5.2 million% for the first cycle of Bitcoin. That is according to the model that I go over or will speak about on this channel. And as you can see here, it started out as red candle, we had the green candles for the first cycle. Then here, second half of 2011, we saw this red candle. This indicated that that prior cycle here was ending. It was over, bear market here, and then obviously once it flipped to green again, we then had these 4 6-month candles here, leading into the second half of 2013. This bull market here would have been phase 1 of cycle 2. Then obviously we see here red candle again. The bear market begins of cycle 2's phase 2, leading into first half 2015. Then it picks up again, and we see these 5 candles leading into the end or second half of 2017. That would be cycle 2, phase 2, where from here all the way up to here, again, that's going to be cycle 2. Here would have been cycle 1. Then again, we're just going to rinse and repeat. Here is going to be cycle 3, phase 1. Obviously here at the end of cycle 2, we saw the red candle here on the 6-month. The bear market then began going down to July of 2018, had the intermediate pump, another red candle, whereas you can see this time around, obviously this green candle didn't close above the prior all-time highs, so the rule in terms of how I'm articulating this here wouldn't particularly apply, given that each of these prior instances, you can see with this red candle, we had green candles broke prior all-time high, then red, so that initiates the bear market. Whereas this time around we have the red candles, intermediate pump didn't break the prior all-time high. This red candle wouldn't be a bear market beginning or indication. So again, it just continues to pick up here. We had the first move here, would have been the first move of cycle 2 or cycle 3's phase 1. Clearly here you can see that this broke the prior all-time high. We then had the red candle here, first half of 2022, leading into the second half of 2022. And then we've had these 4 consecutive green candles. And currently, the first half of 2025 is red. There is 3 months, 19 days left. So, according to the last 14 years of history, if this current candle right here ends up closing red, then that means that, fortunately to say, approximately $109,000 was the bull market all-time high. But if this candle can manage to not close red, then it will sustain the current bull market that Bitcoin is in. I am rather lent to believe that we will be able to tell that whether or not the bull market is got one more final push in it, or if the bear market's technically already began. I would say probably somewhere around a month, maybe even less, from a month to a month and a half, we'll likely be able to tell that if this candle is going to close red. Because if indeed, hypothetically speaking, if 109,000 was the all-time high of the current bull run, and which the bull run being over, according to this, then we will continue just to see this 6-month candle here currently continue to go lower and lower. As I've mentioned plenty of times, approximately $60,000 is the bottom of the barrel. That would start to push the current retracement down to the 40 to 45% range. If it starts to significantly, especially on the daily, especially the weekly and higher, close below 60,000, and it's just showing low volume towards the upside, high volume towards the downside, so high bearish volume, and it's just continuing to find rejection at key levels, then it will obviously continue to validate the notion here that I'm pointing out. The past 14 years and the 6-month candle closing red, ending the current bull run with the all-time high being approximately 109,000. Now, my bias currently is that that's not going to be the case. I still think there is the final push in the current bull market that we're in, which is the, as I've said, here this entire price action is phase 1 of cycle 3, such that this right here was phase 1 of cycle 2, and this was the first leg of phase 1, and now we're on the second leg of phase 1. We are, according to my model, we're in the third iteration of what was labeled as the super cycle back here in 2012 to 2013. Yeah, I know, obviously it doesn't come across as a super cycle. This has been one of the more boring, stair-stepping bull runs. The Bitcoin, I mean, really it's kind of been the only stair-stepping bull run, especially this from 15,000 to where Bitcoin currently is. It's been a very much so a resemblance of a stair-stepping price action, but rather beautiful, as I've said. I think that the current bull run is structurally very appealing to the eye bull run. But for the Heikin-Ashi candles here, what I want to focus on are the current green candles, where you can see this first green candle here, second half of 2023, still in the 6-month chart. This first candle was, rounding it up, 80%. The second candle was 142%. This third candle was 155%. So I've seen each of these times that the candles are increasing in terms of their upside. Right now, the current one is 81%. This one on the Heikin-Ashis is still green. The whole idea of the red candles, such as I was going over on the prior chart using the traditional candlesticks, doesn't particularly apply to this one. It does roughly, but as I said, that's not the main focus for the Heikin-Ashis here that I want to go over. So as I was saying, each of these 4 candles, or at least these 3 so far, each consecutive one has increased in percentage gains, and given that my bias is still leaning towards the fact that there's one final push in the current bull run, that means that this, following the trend and the pattern, like I said, this one's 155, so rounding it up 156%. This one's going to have to be some degree higher, so let's just push it up to 100, around 160, as close as I can get to it. 164% is approximately 160,000. Let's push it up to 200,000 or 200%. That puts it up at 182,000. $200,000 would be around a 230% candle. Now, if we take the Fibonacci tool here, and that's the time tool, we take the correct tool here and take the retracement from here. As I said, this is phase 1, or not phase 1, but cycle 1, leading into cycle 2, specifically down here to phase 1 and its bottom of cycle 2, where you have the bear market retracement here. Then we can see that the first phase here topped out in this orange zone, specifically at the 2.319. Now, if you average out this entire orange zone, it uncoincidentally, I believe, happens to average out to very close an approximation to the 2.272, which is an actual Fibonacci retracement. So generally this orange zone, such as 2.184 to 2.359, is, as you'll see here, and as I've demonstrated plenty of times, the all-time high in terms of the phases and the overall cycles for Bitcoin. Now again, if we take here phase 1 of cycle 2 is all-time high, down at the bottom of the bear market of phase 2 of cycle 2, again we see that in late or second half of 2017, again we see topping out in the orange zone, specifically wicking up to the upper bound, as I said, the 2.359. And if we do the same thing here, this time around with phase 1 of cycle 3, so from the 2017 all-time high to the bear market low of 2018, we can see that the orange zone here, so the all-time high phase cyclically speaking zone of the Fibonacci retracement, ranges from 176.8 thousand all the way up to 245, 457,000. As I said, the 2.319 is where the prior, so phase 1 of cycle 2 topped out at, which this time around is at $227,875. The average of all these, as I said, the 2.272 sits at $207,448, a little bit more of a reasonable price target. So anywhere from, as I've said, for months at this point, according to this, anywhere from 180,000 upwards towards approximately 230,000. I think there is definitely the room for it to push 250, perhaps even 300K at highest. I don't particularly, personally speaking, at least, think that Bitcoin this time around will go too much higher than $300,000. And even if we go back, you can see here with each of these end of bull run candles, you call them blow off candles if you want. You can see here this one was 25,000% candle. The second one here was a 31,000%. This one here was 2.9 thousand%. This one here was 2.2 thousand%. So this is the only one that deviates a little bit, but for the most part, these final two candles of each of these bull runs, this one 382%, this final one 1.5 thousand%. Here for 2020 to 21, this one was 265%, this one was 378%. For the most part, each of these candles get larger and larger towards the end of these bull markets. Again, this is relative to each time from 80% here to 142%, 255%, where we'll see, I think, obviously assuming that the bull market's not over and the traditional candlestick chart doesn't close a 6-month candle as red, we'll see here something above at least 155%. Like I said, that puts it up to somewhere around 160,000, approximately at that $180,000 mark. 180,000 specifically is, I think it was 187,000 I said for the Fibonacci, is 210%. And then, like I said, going up to 230% is going to be around a 280% move. 300%, just to get towards the higher of where I think it go, would be around basically a 400% move. So again, all this hinges on, forget about the lower time frame analysis, really forget about the weekly, even forget about especially the 4-hour, the daily, the 2 daily, whatever you may be looking at. This right here, I believe, is going to be very important. Obviously, this isn't like some form of guarantee. Obviously, this could change, even though it's been 14 years, as I demonstrated with each of these red candles. You can see beginning this time around might be different, and this candle might close red, and then the second half of 2025 might, impulse back up, ramp back up towards the price targets that I've mentioned at, somewhere above 180,000, maybe upwards towards 200, 230, 250, maybe even 300K. I still think by the end of this year for Bitcoin, at latest probably Q1 of 2026. And one thing I also want to point out here lastly is if you, from here 2011 out to here 2014, where we can see a span of 915 days, 5 bars, and I do the same thing here out to the next red candle for the bear market. We see 8 bars. So this is going to be 4 years here, whereas the 5 bars is going to be a little under 4 years. Really the only time it deviates. Whereas if we take another one out, again, it's going to be another 8 bars here, another 14, 1.4 or 1,461 days. Do the same thing from this red candle, again, out to the next red candle would put basically the beginning of the bear market sometime, let's say it kind of put a bubble around it, sometime around Q4 2025, Q1 of 2026. So what I think could be possible according to this, and it also could be perhaps a little bit earlier as well, it's like if we take it out to 5, Obviously, 5 is not going to play out because that would have had to have meant that this candle here, which is already closed green, would have been red. So it could potentially be 6 again. Bear market could be already on its way. 109,000 could have been the all-time high. Maybe this time it'll be a little bit early, and it'll be more around 7 bars instead of 8 for these second and third times here, and sometime in the second half. So again, sometime maybe around quarter 4, 2025, quarter 1, 2026. Like I said, to put a bubble around it would be when bull market is, topped out, bear market's beginning its earliest stages. So what I think could potentially be shaping up here is something along these lines, where I think personally where I'm leaning is that this current red candle is going to flip green. We'll see it push upwards to approximately $200,000, give or take around $30,000, and it will be somewhat reminiscent of 2020 here, or 2021, where we'll see this candle again flip green, and then the next candle here for the second half of 2025, maybe we'll have, let's say this candle pushes up to around 180 to 200,000 for the first half of 2025, and then sometime during the second half, so beginning in July of 2025, we'll have one final small push from that 180k to 200k region upwards towards 230,000, or maybe a little bit higher, because I said maybe 250k, maybe 300k, but all things looked at, seems somewhere more around $200,000 to $230,000 is a bit more justifiable and reasonable, technically speaking, at least. So take a bar pattern here. Like I said, we might see something along. Did I not even take the? There we go. Might see something along these lines where it really doesn't even look how I want it to look. Maybe something along these lines. I mean, it could play out too, where this candle just barely flips green. Maybe it moves up to around 130,000, and then sometime second half of this year, whether it's July, August, September, maybe quarter 4 is when Bitcoin will top out. I'm still leaning to, at this point, sometime closer to like late June, July, August. But depending upon how fast Bitcoin recovers, if the bull market's obviously not over yet, then again, depending upon how quickly it recovers and how that plays out, it could extend to quarter 4. I know a lot of people, a lot of credible analysts are generally pointing towards quarter 4, but as of right now, I'm personally still looking towards somewhere around July, maybe June at earliest, August, where we'll start to see maybe Bitcoin heading towards that all-time high range that I've mentioned, mid to late June, really hitting it around July and starting to come down around August or so. But obviously only time will tell. Now, to wrap up this 6-month analysis, moving here to the weekly, I want to first point out this uptrend channel here, where we can see from the beginning of the bear market, or the end of the bear market, beginning of the bull market, 16,000 at the end of 2022. There's a bounce here. Bitcoin traded to 30K, went sideways, another bounce here, 25K, moved up to 42, 43K. Consolidated for a bit, moved up to 75K, traded sideways for another 6 or 8 months or so. Bottomed out at around 50K. And then here moved up to 108, 109K. Now it's come down again into this channel. So far, this has been 1, 2, 3, and now 4. Will this be the 4th crucial support so far? This is also finding confluence with this slightly ascending RSI channel here. Currently finding a bounce. This has been bull market support, basically. Again, this is going to be significantly correlated to the price uptrend as well. Now, to pull back the Trader's Reality Indicator here, we can also see that the 50 EMA band here, so this purple band with this turquoise, the 50 estimated moving average, is also, again, basically, they're almost kind of all the same in a sense, where, or more so specifically comparing the band here to the uptrend of the RSI, where you can see the band with support here, such as the RSI with support, the band with support here, such as the RSI, and then obviously so on and so forth for each of these areas here that I have pointed out. So, and this is also generally a crucial spot right along the 50 EMA, which is where the support was found back in September 2024. There still is this vector zone going all down to 69,000 that could be completely recovered that I've mentioned, which would take it basically down to the bottom of the 50 EMA band. It could be something similar here to August of 2024 when we saw the wick down to 49,000. So we might see a quick wick down to 69,000, maybe a little bit lower. Well, actually, if it wicks down to around 69,000, it would see a brief wick below the 50 EMA band itself there. So that's definitely still in store. But as of right now, we are seeing this bounce in the RSI channel, and we're also seeing a green candle showing some form of hopeful potential supports in the ascending RSI uptrend. Looking here at this weekly chart, again, I have the same here on the price uptrend here that I showed on the last chart. Now, if we look here at the RSI, I can see horizontally speaking, this 272 here has been supports since the beginning. It's basically showing the same thing that the RSI on the prior chart was showing, but like I said, horizontally speaking rather than an ascending. Whereas you can see here, there's also been this 6-stage move for each of these longer term sideways actions. So from this intermediate point consolidation here up into the longer term sideways action, intermediate consolidation up into the longer term sideways action, where we can see here the first leg, consolidation, intermediately, second leg, first leg, intermediate consolidation, second leg, longer term retracement, such as happened back here. Then we're seeing the first leg here, intermediate consolidation, which this time has been a little bit more drawn out and more severe, which I think makes sense as the bull market's progressing. And there's the factor of decay. In general, if you just look at macro environment of Bitcoin, obviously as it progresses over time, it's maturing, it's getting older, and the phases and the cycles are lengthening as time goes on. The bulls markets are less bullish, the bear markets are less bearish. Those of you who've been within the space and indulging in Bitcoin content and educating yourself on it should be, I assume, rather familiar with this whole notion of the lengthening of the cycles and the decreasing of gains and also the less severe bear markets. But so this is also again going to be a crucial area down here on the 272 to find support. Now also I find it very interesting looking down here at the RVI, the relative volatility index, that currently you can see here that this general range was horizontal support for the entire bull market, but with this recent move, which still, like I've mentioned here, price-wise looks just fine. As I mentioned here on the RSI, looks just fine on the RSI, the prior chart, and everything I've gone over up until this point so far. It's just very interesting to see that how oversold this is. It's sitting at 29, so it's in the typically considered highly oversold range, 30 or below. Sometimes it's 20 or below, depending upon indicator or personal preference. But if we zoom out a little bit, you can see that it's at the exact same level, basically, as when Bitcoin was back in January 2022 at 36,000. Obviously, there's some hidden bullish divergence with respect to that, but more so there is this hidden bullish divergence with respect to each of these prior instances here and here. I mean, really this entire, where you see these lows here on the RVI. Yet, obviously back here, 25,000 was the bottom. Here, 50,000 was the bottom. Bitcoin is sitting at approximately 80K for the local low. Yet the RVI is significantly more oversold than it has during this entire past history of the current bull run, which I think right now, at least, considering things hold up and we don't see the price go significantly below 60K, really personally, I don't want to see it go significantly below around 69, 68,000, like I said, with that vector zone, other reasons as well. But I mean, I think right now this is currently a bullish signal, all things considered. Now I have this fractal pattern here. Now this extends out here, just so the end of this blue box, beginning of the black box here. And it goes all the way out to January 5th of next year. So if Bitcoin tops out by around, let's just say, put a bubble around mid-July, as I was mentioning earlier on the 6-month chart, the context of the price targets and whatnot. this is something along the lines of what it would look like, assuming we get a quick recovery and we get, just a, a nice impulsive bullish upheaval, which I mean would make sense if you look here at each of these. So looking here at this is a 5-stage impulse wave. We see 1 here, then we see 2, then we see 3, then we see 4, then this move here would be 5. Each of these second moves here have been more violent in terms of the fact that the percentage gains were more and they took less time to make more percentage gains. So I'm assuming, until proven otherwise, the trend is going to uphold and we'll see a larger percent gain here for the second leg and in a shorter time period, or at least just a roughly same time period as this first leg here. And this is what it will look like topping out by around mid-July. Again, give or take a month or so, somewhere around 180, 190,000. It pushes up to the top, so around, like I said, somewhere around like 220 to 230,000. This is what it will look like here. This also does have relevance with the ascending trend here. There's this one where you can see this first move rejection and second move rejection. So we see it move up close to this around that time, would put it somewhere around that $230,000 range. If I adjust this a bit and put it like this, down to, you can see here, there's this rejection at the bottom of the bear market, and then again rejection from 1 to 2, rejection from 3 to 4, and then from 4 to 5 would again put it somewhere around approximately $220,000 to $230,000 for that trend line, assuming things hold up. Obviously that the bull market's actually still here with a reference to that 6-month analysis that I went over. If you look here at the 4-hour, there is some bullish divergence, perhaps exaggerated bullish divergence here with the low, then a lower low here. The RSI is ascending. The MACD is also ascending here. The stock RSI is also got some bullish divergence here, more so in the shorter time frame with these lower lows and these higher lows here. If we look here at the RVI, again, similar, some bullish divergence here on with respect to here and here, and then also like the stock RSI, we're seeing this kind of shorter term bullish divergence. The ASO down here is crossed bullish with this recent move from 76.5 up to 83.7. Now it's coming into contact here with the very bottom of the 50 EMA, so if the price is going to move lower, I'd assume that it's probably might push up a little bit higher, maybe back up towards around, maybe at the highest around the bottom of this purple zone, around 85.5 to 86.5. It's going to come down lower, then we might see it drop down to this vector zone, which would put it down to the $69,000 range, which this is really the only notable vector zone left. So 60,000 is going to be about right here with this horizontal line. So like I said, this would be a let me get a little bit more close to the top. This would be around a 45% move. Like I said, historically speaking, 40 to 45% moves are the highest, the most severe retracements during a bull market. If it starts to significantly, so really 50% or higher, and it starts to show significant bearish volume and just continued rejection after rejection after rejection, then again, like the bear market has begun, and in this case 109,000 here was the bull market all-time high. So we might, worst case scenario, see something along these lines. But in terms of these vector zones, which would be volume-based liquidity zones, this right here is really the only one that's worthwhile to look at, which, like I said, goes down to 69,000. The weekly chart also validates that, as I pointed out. We look here at these resistances, specifically, most notably, these black resistances. There's this shorter term one here when it comes to the most recent downtrend we've seen back at the beginning of February 21st. Getting above this, it depends upon when, but let's, somewhere around 88, so just let's push it up to 88 to 90,000. It's also generally going to be coinciding with the 200 EMA, 800 EMA here. There's this one here, beginning from 109K, so around January 20th to January 30th. Here, this is going to be also horizontally synonymous with this, or in the bottom portion of this orange box, but specifically right here, this sideways that got rejected obviously down in this most recent price action. So this will be somewhere, again, depending upon how quickly Bitcoin recovers, as this line is descending, it's going to change over time, but somewhere around, say around 95, 96, 97,000. Now I do want to point out here, if we look here at the 200 EMA, so this white line, and then the 800 EMA, the violet line, these are very close to crossing. So if these do cross, let's look back at each of the times in the past, specifically the current bull market, we can see that the last time this crossed below was right here, and this was right at the end of the, it's actually after Bitcoin had bottomed out. So that's a good sign. That means following in suit, if a similarity occurs, then Bitcoin's already bottomed out locally and it's going to continue to go higher. Now, after this did happen, Bitcoin obviously locally bottomed out here, and then did go up and then had one more move down toward the downside. So from this point onward, it did come down another around 12.2%. So if at this crossover from roughly where it sits now comes down another 12%, that would put it at around 72.5. So that could be in store. There's also this cross right here, which actually happened to coincide with the final local low here, as we saw this stair stepping here as it finally managed to come into the 50 EMA band and break it and then move higher here. This did lead into a move towards the upside, obviously, then it did dump right back down to a lower low. But generally, in this case, the intermingling and the crossing over within this time period here of the 200 and 800 EMA was signaling that the bottom was, for the second case, already in. For this first case, very close. I mean, really, this went down to at lowest 53,000. So, I mean, obviously the low is at 50,000. So, I mean, essentially, that was close enough, right? Go back even further. So, the last time this happened, back here, we see the 200 EMA go below the 800 EMA. This happened right here, August 27th, during, again, this range local low. So from this point, it did go down around another like 5% or so, but generally the trend here is that on the 4-hour chart here during the current bull run, once this 200 EMA starts intermingling, going below the 800 EMA, it's happening during the final moments of a consolidation or a correction. In many cases, the lows already been met, or there's very little downside. So like I said, 5 to 12%. So I mean 5% would only take it back down to around like 78,000. So if that happens, we're just generally going to be horizontally bottoming out. Like I said, 12% also as well would take it down to around 72. It's just around 72, 73,000. So maybe something along these lines happens here, and we kind of just see this descending bottom. I would again further fulfill the vector zone. The CME gap's already been completely filled at this point as well, so that's also another good sign. But according to this, it appears that also factoring in the fact of my bias being that I don't think the bull market's over, it appears to be, which I've already said, the Bitcoin is locally bottoming out here. It might go a little bit lower, as I've said, but it appears to be locally bottoming out. If we look here at this chart, the 800 EMA right now sits at approximately 74.2, so we might see again another slight move back down to that. Again, that could line up with that 5 to 12% more downside, potentially speaking. There's the descending RSI resistance here for the 12-hour chart. We see some bullish divergence here. To me, this looks like it is preparing to have a move and a reversal towards the upside. Again, I mean, we might go a tad bit lower, maybe down to 69,000, or maybe even lower, as long as it doesn't significantly go below 60,000. Now, I pointed this out on a community post the other day. I also went over something very similar to this on the daily, but this purple zone down here ranges an RSI from 25 to 17. this currently, with the most recent move, was the fourth most oversold that the RSI had gotten during the current bull run since 16,000 at the end of 2022. So, I mean, really, we could, again, see one more move down into this purple zone, which would likely line up with that move towards 69,000, maybe even 60 to 65,000, as I've said. But this 12-hour chart showing, again, there's this bullish divergence. There's bullish divergence on every indicator on the 4-hour chart, which that doesn't guarantee anything, but they are good signs nonetheless. Again, we see pretty significant bullish divergence here on the stock RSI, the MACD again as well here, the histogram also seeing a deviation, the ROC, the rate of change, the velocity of price here is also seeing the same thing. So finding this confluence here of all these indicators having these bullish divergences only strengthens that cause. Now again, we could see the price have one more dip lower where we see one local low, two local low, three local low, and a series of three. We see the RSI dip down a little bit more and then come up something along these lines, and it's still ascending, and that's the genuine bullish divergence. So again, there's still room to go a bit lower. Like I said, these bullish divergences don't mean that it's already bottomed out. Locally speaking, at around 76.6, as it can always go lower. But this confluence, again, the 4-hour chart with all these indicators showing what I pointed out as well with the bullish divergence, the weekly charts here as I pointed out, and then really, like I said, culminating here with the 6-month chart with the traditional candlesticks, and whether or not over the next 3 months, 19 days, this is going to be the end-all be-all. I believe that this will, again, it could change. This could be a paradigm shift, as I've been mentioning. But the last 14 years of history are quite credible, I'd say. So if this closes red, bull market's more likely than not over. If it closes green and has a nice impulsive move towards the upside, I believe this will be the final move towards the upside of the current bull run. But that was all that I wanted to go over in this video. So as always, none of this is meant to be financial advice, but all that being said, I hope you all enjoyed, and I hope you all have a wonderful day. See you forever, such a long